Hi everyone, this is Manoj here once again, and on our usual weekend analysis of the Nifty and the Bank Nifty to check what's in store for us and what are the trade opportunities that we see. And in this particular video, I'm going to try and uh, look at the Nifty with a lens of two indicators. So I used to previously use just the volume profile to give me an idea as to where the market is and what are the probabilities of the price going where. I'm going to add the fair value gap to my chart to get a little more better understanding of what can happen. Probably using the fair value gaps gives me a little more assessment as to what's happening and tries to pinpoint the exact areas. And if I can see a confluence where I on the value area high or the value area low of these fair value gaps, that adds a little more confidence in me on the move that I'm expecting. So with that said, let me share my screen and we are going to look at what's happening. So this is the Nifty chart, as you see, the Nifty futures chart, and we are on the daily time frame. So let's start with the monthly. What do we see on the monthly? Let's start with the monthly. So on the monthly, we see that there's been a beautiful rise in the Nifty in the last 2 months, and we've been constantly rising. What you see green here is the fair value gap. The concept of the fair value gap is something that I'm not going to be covering in this video. Yeah, I have other videos to cover that, and we can take that up in those videos. But here, for people who already know what fair value gaps are, it is this area where the first candle and the first candle high and the third candle low, if there's a gap, that is called the fair value gap. This is a bullish fair value gap. And if you take the reverse case, it would be the bearish fair value gap. That's how, as far as the fair value gaps go. This is a weekly picture. We've been growing constantly for the last 2 weeks. And if you see in the last 2 weeks, we have crossed and we have more than 1,000 points, 950 points that we've gone up in the last 2 weeks. That's substantial. That's about 5%, not 5%, yeah, lower than 5%, but that's a substantial move when you talk about Nifty. Let's come to the daily time frame. And this is what you see on the daily time frame. Now, these are again, on the lower time frames, these are the fair value gaps that you found. Now, fair value gaps are basically imbalances that you see on the chart. Now, when does an imbalance happen? When the price suddenly moves from, on a high, in the upper trajectory or on the lower trajectory, where only one side of the market gets to trade. So in these cases, in the bullish, fair value gaps, only the buyers got to trade this, and there was no opportunity for the sellers to come back and do any selling in this areas, which is now the green shaded areas. And generally, these unvisited areas, when the prices come back to them, they either act as supports, and the price is pushed back into the higher territory after it goes and comes and spends some time in these voids. This is called the fair value gaps, so the imbalance areas. So that's not the subject of this video, but I'm giving a little brief overview of what is fair value gaps. Anyway, so this is on the daily time frame, and what I will do here is I will try to use my volume profile tool to give me some access, some ideas to what's happening. So like always, I distribute my chart into a number of areas. This is the current situation on the fair value gap. And what we see here is we have hit the extremes of the equilibrium area, and we have hit the top, and now we are facing some resistance at the top. So let's look at this in a lower time frame. So let's go to say 1 hour, and what do we see in 1 hour? So on the 1 hour, what you see here is that we have gone from a lower area of value. So if I go on the 1 hour, what I see is this is one area where there was some equilibrium. So I'm going to just hide the volume profile on the higher time frame, which was the 1 hour, 1 day. And now we're at the 1 hour volume profile tool. And so we can divide in the 1 hour to get to a micro picture. We can divide our chart into 2 areas. And here goes, these are the 2 areas that are interesting to me. So currently since the 3rd of July to the 5th of July, we have traded into a higher range, and we are yo-yoing between these extremes. The blue lines that you see, this one and this one, are the 2 extremes of the equilibrium area, and these are the areas where one can trade within. So what happens is when the price moves in a sideways movement, what it does, it tends to oscillate between the high ranges and the lower ranges. So it tends to oscillate between these 2 areas. If you see, you can clearly see that this is what the nature of the trade is. So given this scenario, if the situation continues, And if you see that this fair value area is broken, we will tend to move towards the lower areas. And using the candle signs technique, we are seeing that there is some resistance. We tried to go over this area. There's some liquidity in this situation, in this areas, and the liquidity we face some resistance, and then we're seeing a liquidity sweep, and we're coming down. So let's go into another lower area, and let's go to 15 minutes and see what's happening. So in the 15-minute too, we see that this is the fair value gap that is causing the resistance move. Unless we move higher and we break this fair value gap, I'm not looking to go higher. So if you break this fair value gap, you will tend to probably go and tag these areas. So that's a small trade. It's a very small trade. And this is, once you cross this area significant, if with a lot of move, you will probably get about 25, 30 points. That's not much, not good enough to trade. But when you see that the prices are now beginning to find resistance at this level, though it is on a 15-minute time frame, it could be that we could face resistance and come down and then go back up again. So there could be a trade here which will make us go down back to the lower areas, and then find some more support here again and take us back to these highs. Now, what is the price difference between the high ranges and the lower ranges? So if you see, this is a price range of 126 points. So if it's a sideways move, probably you'll get one move down in the day, and then the prices will move back up and go to the top again. This is something that I see happening in the next 2-3 sessions. So as far as I think, what will happen here is that we might have a move like this. This is the lower end of the range. This is the higher end of the range, and probably could extend it to here too. And we could be yo-yoing between these two areas in the next couple of days until we see a breakout either on the upside or on the bottom. So if we break out of this line, which is now going to be the next level to watch out for if you want to go for your longs, and if you want to go for your shorts, this is the area. If it breaks down, we'll go to the lower areas. And in the lower areas again, the area to look at, the next equilibrium area on the downside, is this area below the 24,226 to 24,26,142, and we may spend some more time in this area, as I think, before we decide to make a significant move. But then again, these are markets and you can't predict, and the news catalyst could easily push the prices beyond these territories. And the moment we go higher than this, we look for the longs. We go lower this, we look for the shorts. And within this area, if we see intraday trades, reversals, we sell at the top, looking to target the bottom. We buy at the bottom, looking to target the top. So this is as far as the Nifty is concerned. I'll just mark out the levels for you here. So these are the levels, and these are the lower levels. So these are the significant levels. You can take a snapshot of this and use them for your trading if you trade intraday with futures. With options, I cannot guarantee, because with options, it's preferable to sell the options than to buy, because you can't quite predict what is going to be the time taken between the traversal. But if you see this particular reading here, this ATR reading is 248 points. So what it goes to say is that on an average in the last 14 days, Nifty has given 248 points of move within the day. So if we calculate the move here, this is as big as 162 points. So within a day, you could have one visit up and one visit down. And that's the nature of the sideways movement, where prices are not going in one direction in a very big way, and they will give you tops and bottoms within the same day. So look out for this, and don't expect a lot of movement unless we move out of these ranges. The top above 24,450 will signal a fresh up move, and a drop below 24,289 or 285 is going to signal a fresh dropout. So this is as far as Nifty is concerned. Let's go to Bank Nifty and see what we have in store in the Bank Nifty. And again, Bank Nifty. So let's start with the monthly. And what do we see on the monthly? What we see on the monthly is a beautiful move. My God, look at this move. We moved beautifully in this last period. So I'm going to remove the tools here. So if you see in the last month, we did a crazy move. We made a move right from the bottom to the top of about 6,500 points. Imagine 6,500 points in Bank Nifty in a single month. That was the month of June. And we are still just above the highs of the month of June, and we are above those levels. So unless we break this level of 52,520 odd to the bottom, we should remain bullish on this index too. So now let's go to the weekly, giving you the same picture. There are two imbalances, and the Nifty is showing a gallop. It is in this last week, it did take a little bit of a rest and beginning to consolidate a bit. So what do we get to see from these candlesticks? Let's go to the daily and see what's happening on the daily. So what you see here in the daily is that we are beginning to form some support in these areas. So yeah, this tells me that this is a support base at this point of time. So 52,275 is an important area to look at. I would delete this and I would consider this as a significant area. Until we break this area, we should be looking at longs in Bank Nifty too. The moment we go below this and begin to spend some time below this level, then we could be looking to target the 51,222 areas, which is 1,000-point drop. But only after it sustains for some period below this line is when we can talk about this area. If it just comes down and wicks back up, this means that it'll just come down to take some liquidity and go up. Now, what has happened here is that we have seen this dip once and it has gone back up again, but we found some resistance on the top and the price has been driven back down. But again, this next time it came here, we again saw a bounce. So there is some kind of buying activity in this area that we see, and this tells us that there are some buyers sitting in this area. So there's some buying pressure in this area, and that's something that we need to look at. This buying pressure seems something that we need to look at. The moment it comes here is when we should be buying. So let's break it down to a lower time frame. So let's go for a 1 month time frame and see what's happening. And what do we see here? So again, in the 1 hour time frame, we're seeing a good amount of consolidation, a sideways move for the last how many days? Let's see how many days. So we are here on the, what date is this? I'm so sorry. I can't see the date because it's hidden. We are, what is this? We have, let me just check. We have been moving since the last 2 weeks. We have been in this area from the 25th to this period. So what we are doing, we're spending some time in this area and consolidating in the Bank Nifty. Now, what does this tell you? Like I disclosed to you in the Nifty, I'm going to just try and push this back and see what's happening on the candlestick. So what you see here is that we have been yo-yoing between these extremes, which is something that happens all the time between the higher extremities and the lower extremities of volume profile range, which is the value area, which is the equilibrium of what we're seeing. And what we see here is that we have been yo-yoing between the top and the bottom of this range. And we are now back again. We're climbing up and looking to go higher. So the immediate trade in the Bank Nifty is to expect a target of 190 odd in the coming period. Could be 53,200. Let's say 53,200 is what we're seeing here. And currently we are somewhere in this area. So we could see a little bit of a drop. Now again, I could go to a lower time frame and see what's in store for us. So what we see here is there's some kind of support built here, and this could be an outcome that could happen. So in my thought process, this is a trade which is waiting to happen. So we could be looking at a beautiful move which can give us about 560 points immediately on this move. So we could be buying somewhere in these areas, which is somewhere around 52,600, with keeping a stop loss somewhere around 52,356 and expecting to hit a target of 53,200. So that would be a risk reward of 2:1. You could aim for a risk of 300 points and you could aim for a rise of 600 points. That's a sizable amount of money that you can make. So technically, the futures lot is about 90 odd thousand rupees per lot of 15 shares, And on this, if you make 600 shares, that's a 10% return that this particular trade can give you in a matter of 1 or 2 days. So if you're willing to make a 10% gain on your investment, this is a beautiful trade to take. Buy somewhere around 52,600 odd, and aim towards 53,200, and that should be a trade that should give you a beautiful trade of about 600 points, which is 10% of your investment. Amazing, crazy. I'm feeling pretty confident that we can risk about 5,000 rupees for a gain of 10,000 rupees on investment of 96,000 rupees, which is the cost of owning one Nifty. And this can happen in a matter of 2 to 3 sessions, in fact, even one session. So this is a trade that's waiting to happen. And if you think that you get an opportunity to test these levels, go for it. Go for it. But this is not advice. This is my analysis, and it could go wrong. So you have to consider your own risk pattern and your own. You can consult your own advisor if you want to, or you can use your own conviction to trade. This is not an invitation to trade, but this is what I see on the charts, and I feel it makes sense to share it with you because that's the highest probability of the trade happening in that direction. So this is all about Nifty and Bank Nifty in this video. I don't want to make it too long. Go through it, guys, and try to take advantage of the signs that I see and the moves that I foresee happening. We've had a great track record on all the probability projections that we made on these weekly analysis, and we have gained personally, and a lot of our followers have also gained based on the information that has been shared on this channel. In no way is this a trading advice. This is a part of the analysis that I see based on the tools that are available to read the charts, and they give a very good idea of where the prices can go. We have been very successful in our analysis, and that has been the reason why we've done well in the markets in the past, and there's no reason why we should not do that in the future. But then again, I'm repeating that this is not an invitation to trade. Please trade with your own analysis and with your own thought process within your own risk parameters. This is just a feeling that I have, an analysis, a result of my analysis, and I'm sharing that with you on this channel. So if you like the content, please give it a like, comment if you require to need anything to be for me to answer on this context of what I have delivered in this video, and do subscribe and share this channel. Do subscribe it for receiving more of such alerts, and do share it for like-minded traders who may be struggling with their trades but need some guidance to score from the markets. That's it for this particular video, and thanks for spending this time with me. And I'm always looking forward to share things that can help you get better at your trading. Thanks and goodbye. Look forward to